Thanks for joining us today on The Close. I'm Marella Fernandez. Markets close in a half hour's time. Let's get to the stories we are following in the BNN Bloomberg newsroom. The U.S. president now says that NATO Secretary General Mark Rutte has formed the framework of a future deal with respect to Greenland with Donald Trump. So Trump's saying, as a result of the negotiation he's had with Rutte, he would no longer impose tariffs on European countries. Those tariffs were set to take effect February 1st. And during his speech at the World Economic Forum in Davos, Trump said Canada lives because of the U.S., adding the U.S. is building that golden dome that's going to be defending Canada. Trump also said Canada gets a lot of freebies for which they should be grateful but are not. On trade, Donald Trump says tariffs have radically reduced America's ballooning deficit. Now, at the same forum, the International Trade Minister for Canada, Maninder Sidhu, says this country must expand trade with India, especially in agriculture and energy. He says formal talks on a new economic agreement could begin in February. India is the next target in Mark Carney's push to diversify trade as Ottawa takes a more pragmatic approach to repairing strained ties. And let's get to this. Shares of Cenovus Energy today trading higher after a report from Reuters that the company is considering a sale of its oil and gas assets in Alberta. According to that report, the assets are worth about $3 billion, and Cenovus is looking to cut its debt after its takeover of MEG Energy last year. It comes as the energy company sharpens its focus on its core oil sands business. Here is where we stand on the markets right now. The TSX Composite up just 86 points to 32,837. Markets moving up in the U.S. as well, a 76-point move up for the S&P over 1%. The Dow Jones gaining over 1% as well today with a 560-point move up. And the Nasdaq up right now 1.2%. Only hours after delivering the speech on the world stage in Davos, the U.S. president now says there's some sort of agreement on Greenland. Trump posted saying he won't impose the tariffs he threatened on Europe. Officials in Denmark and Sweden are also saying some sort of understanding has been reached. Let's go to Bei-Chin Lin on this, head of Canadian strategy at Russell Investments. Thanks for joining us today. Markets started climbing as the news broke about 2 o'clock Eastern time. Is this a sigh of relief for investors?
No problem, Marella, and thanks so much for having me. So I think when it comes to any sort of situation, whether it's tariffs or something else that can cause volatility, markets, generally speaking, do tend to get a bit of a relief rally when you see a bit of a resolution of uncertainty. And of course, we are still very early days. The situation is fast moving. But I think from the market's perspective, the markets are breathing a little bit of a sigh of relief that the tariffs that were previously discussed are now no longer going to take effect in February. And I think another thing that's important to understand is I think this episode that we've seen recently is a reminder to investors of really the importance of having a longer-term focus, of staying disciplined. And yes, it's true that sometimes we can see volatility resurface, as we did, for example, recently with these events related to Greenland. But ultimately, from our perspective, we think that investors benefit from really staying focused on that long-term objective.
Okay, so you're not sort of playing the investment strategy of buying when everybody else is selling off, trying to keep the long view?
Well, so from our perspective at Russell Investments, what we like to do is we like to identify the potential pockets where we think the markets have become so dislocated, so one-sided. And you're correct that we did see the market sell off yesterday with the S&P down about 2% at one point yesterday on the back of that news related to some of these tariff developments. Ultimately, for us, it is really a holistic evaluation. So what we're doing is we are maintaining a strategic stance. We're maintaining that long-term perspective. but then also looking for those opportunities where you might see the markets get a little bit too dislocated and looking for those tactical, nimble opportunities to potentially step in should that volatility present an opportunity.
Okay, so before just a short time ago, this deal was put out online through a post from Donald Trump. We had the U.S. president talk about Canada not being grateful enough to the U.S. On the whole, how would you interpret the early market reaction to Donald Trump's speech?
Well, I think the important thing to remember in terms of the context of Canada-U.S. relations is obviously the CUSMA agreement, the Canada-U.S.-Mexico agreement, is up for negotiation this year. And while we are generally optimistic that there will be an ultimate deal reached on CUSMA, there can be a bit of a nonlinear process where you could see twists and turns there. So we might see some, developments where both sides are trying to get what they think is in their country's best interest. And you might see both sides have certain types of demands that they're making of the other country. But by and large, we're generally optimistic that, look, at the end of the day, Canada and the U.S. have a very tight-knit trading history. There's a lot of commerce that gets done between these two countries. The U.S. is Canada's largest export destination. So we are optimistic that ultimately a deal will be reached.
You see some value in Canadian bonds. So what's behind that?
Great question. So right now, if you look at the 10-year Government of Canada bond yield, it's about 3.4%. Our estimate of fair value is closer to 3.2%. And part of the reason for that is because the markets right now are pricing in, call it a 50% probability of one rate hike before the end of this year. Now, from our perspective at Russell Investments, we still think it's too early to be thinking about rate hikes in Canada. And really, one of the key measures that we've been focused on is what's called the output gap, which basically looks at where is the Canadian economy today versus what is its longer-term potential. And right now, we see the Canadian economy continuing to be softer than that long-term potential. And so traditionally speaking, when you have a situation where the economy is performing softer than that longer-term potential, and inflation is still pretty close to the Bank of Canada's target, there's just no need for urgent rate hikes. And in fact, we think that there's even the possibility of a rate cut at some point this year, depending on how the Canadian economy evolves. And so for that reason, we think that Canadian government bonds play a key defensive role in investors' portfolios.
All right, I do have to leave it there. Bei-Chin Lin, thanks for joining us. Appreciate it.
All right. Thank you, Marella.
And again, the U.S. president today said Canada lives because of the U.S. We'll get some more reaction to that in just a moment. The U.S. president reprimanded the prime minister today during his speech at Davos, Trump calling Canada unappreciative of the U.S.
We're building a golden dome that's going to, just by its very nature, going to be defending Canada. Canada gets a lot of freebies from us, by the way. They should be grateful also, but they're not. I watched your prime minister yesterday. He wasn't so grateful. But they should be grateful to us. Canada lives because of the United States. Remember that, Mark, the next time you make your statements.
So the U.S. president did, at that same speech, back off threats to use military force in Greenland. And then just a short time ago, he announced online, posting on Truth Social, that there is, in fact, some sort of deal with Denmark on how to proceed with Greenland, and that the tariffs that he had threatened to put on February 1st will not take effect. So let's dive into what's going on with Perrin Beatty, co-chair of the expert group on Canada-U.S. relations. Thanks for joining us today.
Glad to be with you, Marilla.
First, your take on that reprimand for our prime minister from Donald Trump.
Well, it's vintage Trump. It was whiny and complaining and attacking everybody else. It's everybody else's problem, and he's trying to save the world. It's Donald Trump.
Okay. Did the speech by Carney, you think, go a step too far, putting Canada back on the radar for Washington?
I don't believe so. But I think the speech that Mark Carney gave yesterday was one of the very best speeches I've heard given by a world leader in a long, long time. He was geostrategic in terms of talking about where we're going, both as a globe and as a country. And of course, Donald Trump was ego strategic when he was talking.
What resonated with you from that speech?
What resonated to me was first of all, it was frank and honest about the nature of the world and about the nature of the relationship between Canada and the US, and that's important. It was pragmatic. It wasn't caught somewhere up in high principles, but it was principled as well in terms of what it is that we want to do in the world and what sort of a relationship we want to have with other countries. So I thought it hit all of the right notes. And most importantly, it made the point to Canadians that there's no point resorting to nostalgia, to wish that things were back the way they used to be, that Donald Trump has changed the relationship permanently. And it's important for us pragmatically to look at it and to get on with our lives.
Okay, that being said, we know Donald Trump often says one thing, does another. There has now been an announcement, or at least an online post, about some sort of agreement with Denmark on the future of Greenland and how they're going to manage that. Also, there might be a critical minerals deal tucked into that. But can you accept, an online post from Donald Trump or any even official message from Donald Trump, given his track record?
Well, and that's, of course, the difficulty. And the challenge for Mark Carney as we look at CUSMA renewal is that even if you can come to an agreement, what is Donald Trump's signature worth? He was the one who replaced NAFTA, which in his view was the very worst trade agreement ever in the history of mankind, with CUSMA, which was the best ever. And he's breaking it today with his tariffs. So the problem with anybody negotiating with him is, even if you can come to an agreement, what does it mean at the end of the day, and does it stick? As of last Saturday, he was threatening the countries in Europe and the UK with whom he had reached a very difficult trade negotiation, a very difficult agreement, and was threatening them that he was going to unilaterally place new tariffs on them. This afternoon, the tariffs are off. Who knows tomorrow?
With a wider lens on how he operates with the use of economic coercion, how should that be dealt with?
Well, first of all, it's very different from dealing with somebody who's rational and principled. In any other international dealings we've had with the United States in the past, there have been plenty of instances where we've had disagreements. But you're sitting down with somebody on the other side of the table who plays by an agreed rule book, who, when they sign an agreement, it means something, where they have a clear bottom line in terms of what it is they're trying to achieve, and where their goal is to reach an agreement that both sides are happy with. In Donald Trump's case, what's most important to him is that he be seen to have won, and most importantly, that the other side be seen to have lost. That's not a very good basis for building a relationship.
Okay, so in that case, we know Canada is already attempting to pivot away, be less reliant on the U.S. Is the country firing on all cylinders to try and do that, or is there more that can be immediately done?
There's lots more that we need to do. We haven't finished the job in terms of getting rid of interprovincial barriers, for example, domestically. We were promised that was going to happen by Canada Day. It hasn't happened. We've got to focus very clearly on getting the infrastructure in place and rapidly that will allow us to get Canadian goods, particularly Canadian resources, to market. We've got to make it clear that we're focused on building our productivity and our competitiveness in Canada. The Prime Minister did a great job yesterday in sending the message that we're open for investment and that that will be a reliable partner. All of this is positive, but there's much more to do. And we need to understand two key things here. The first is that for my lifetime, the single most important relationship that Canada has, whether in business or in security or in diplomacy, is going to be with the United States. We can like it or not like it, it's the reality, and we're going to have to be very focused on managing that. The second that we have to focus on is that it's important for us to recognize that we can't go back to the way that things were before. We have to make a decision to take our future in our own hands and to systematically, in a determined way over the course of literally decades, build our resilience, build our sovereignty and our independence as a nation, and build our prosperity. And that has to be the priority.
Okay, let's leave it there. I'm out of time, Perrin Beatty, sir, but thank you for your time. Appreciate it.
Anytime. My pleasure.
GFL Environmental has announced it will relocate its headquarters. It's going from Ontario to Florida. We had the CEO on earlier. We'll bring you that conversation in a moment. Canadian environmental services company GFL announced today it's going to relocate its headquarters from Vaughan, Ontario, in north of Toronto to Miami, Florida. We spoke to Patrick Dovigi, founder CEO of GFL Environmental.
The availability of having, the availability to the U.S. indices and U.S. index inclusion, we just thought it was a very logical step for us to make this move. I think when you look at some of the likes of Brookfield and RB Global, and some of the rules around the S&P changes and where you're allowed to be included, I think this is a logical step given that we didn't have to actually give anything up in Canada from an index perspective. So we still have the ability to be included on the indices in Canada because we're remaining a Canadian incorporated company. But by making a slight change to, a corporate head office, that gives us the ability to get indexed on certain indices in the U.S., which opens up significant pools of capital for us as a company.
And why is that important? Do you feel all the growth that is your main growth is going to be in the U.S.?
No, I just think as we look to broaden our investor base, I think there are a bunch of pockets of capital in the U.S. and obviously the U.S. being sort of the largest capital markets pools in the world. There's multiple funds and we have, existing investors within our business today, to the likes of Fidelity and Capital and others that have other pockets of capital that are more tied to indices. And I think we just have the ability to attract more pools of capital and pockets of capital from those types of investors by having index inclusion both in U.S. as well as Canada.
And did the tariffs and the uncertainty of everything that's unfolding, were those factors in it?
No, no impact because of the tariffs, et cetera, and, no change to the business in general. This is simply just a corporate head office change.
And benefit, you'll be paying taxes now on both sides. I assume you'll be paying taxes on both sides. Are there benefits to doing that?
No.
Or is that just part of doing business?
Just part of doing business. We're a Canadian incorporated company with also parts of our business that are corporate in the U.S. We pay taxes in both countries. So again, no impact from a tax perspective on the company.
Now, any concerns for Canadians and up here investors and people who use GFL that they might get lost in this a little bit as your focus goes more and more towards the U.S. and beyond?
No one will see any change. Today already 70% of our revenue comes from the U.S. Canada's been home for a long time. It's where we founded the company back in 2007. And, I think as you'll see, you're going to continue to see big green trucks rolling around Canada for a long period of time. My entire family still lives in Canada. So, I think it's just the right thing for us to do at the right time, just to attract pockets of new capital that we previously don't have in the capital structures, which should do very well for investors that continue to be invested in the name.
And have you had a chance to any expectations of how much capital you're hoping to raise or what your plans for it, and where do you plan to direct it?
Yeah, we're not raising any incremental new capital. It's just really just broadening the shareholder base. And as a couple of our large shareholders, exit over time, those incremental pockets of capital could be there behind to sort of pick up incremental dollars that may or may not come from them.
And why Miami for this? Are you looking south when it comes to opportunities? There's like in the southern part of the U.S. and even down into Central and South America?
Southeast has been our biggest growth trajectory over the last 3 to 4 years. As you know, the U.S. in its own rights, we're big believers in the Southeast and through the Carolinas and into the Gulf and up through the Midwest. And just, Florida is one of those states that seems to be open for business and seems to be attracting a lot of new growth from various parts of the country in the U.S., just given, political regimes and some positions taken by other states, there just seems to be an influx of population growth into the Southeast, and we just felt that was the logical place to be.
And now, obviously, there's been some volatility, shall we say, in the relationships between Canada and the U.S., and we heard Trump in his speech today say he was disappointed. Canada, he doesn't feel like Canada has paid enough respects, essentially, I guess it boils down to. Any concerns about being a Canadian company moving down there, like moving your headquarters down? I know you're already down there, but any concerns about relocating down there with that, with the atmosphere that's going on right now?
I mean, that's the political rhetoric, but I think when you look at, I think these two countries have worked well together for a very long period of time. We've worked on both sides of the border for a long period of time. We have a great group of U.S. employees, and we have an amazing group of Canadian employees who all work really well together, and will continue to work well together, even in this, political backdrop that is playing out in the media. But I think the underlying is you have two great countries with great people in both countries that generally aligned and have very common goals. So, we still see long-term value in that as well.
Does it feel like business is business beyond all the politics with anybody you deal with down there?
Yeah, I think it's business as usual. We're in the waste business. Every day people are creating waste and generating waste. And I think, again, there's been a mutual respect between these two countries for a long period of time. And I don't anticipate that is going to change anytime soon.
And just one last about the headquarters up here. What kind of an impact on employees, people being let go, or people moving down to Florida?
No, I mean, our largest hubs today are in Vaughan and in Raleigh, North Carolina. This is more focused on sort of corporate executives. So, I mean, we're talking about, 12 to 15 individuals that are moving south. We still employ, thousands of people in Canada. I think today our Canadian headcount is north of 10,000 individuals, and none of those jobs are going anywhere.
And are you bringing Canadian executives down, and will you still be looking to try and recruit Canadians to come down and work for you?
Yeah, of course. I mean, again, the lion's share of the executive team is Canadian today. We have a mixture of U.S. Executives as well, which will relocate as well. But listen, whoever's best fit for the job will continue being employed, and we'll get the jobs.
All right, that was the CEO, Patrick Dovigi, founder and CEO, GFL Environmental. Let's have a last look at the markets before the end of the trading day. Here's TSX, and we want to show you what happened at 2 p.m. when Donald Trump posted online that there was some sort of agreement with Denmark about Greenland. Apparently, there were positive discussions behind the scenes, and as soon as that post went online, the market started shooting up, as you can see. Take a look at the S&P 500. It is in the positive today, but again, just past 2 p.m. is when you see that spike before coming back down a little bit this afternoon. All right, the end of day numbers when we come back. Here are the closing bells for the end of the trading day. At the NASDAQ, NBC Universal ringing the bell. In New York, discover boating at New York Boat Show in partnership with Progressive Insurance ringing the bell. And Canadian ETF Association is doing the job in Toronto. You're watching The Close on BNN Bloomberg. I'm Morella Fernandez. Here's how we ended the day on Bay Street and Wall Street. Market started gaining late this afternoon with an announcement by Donald Trump online that there was some agreement on Greenland. TSX up 101 points today, or 0.3%. The S&P 500 ending the day 1% up, and the NASDAQ had a 270-point move to end the day 1.2% up. Let's get to the movers in Toronto. We will start here with Athabasca Oil, which moved up 6.8%, 6.7%. A gain of 47 cents a share for Athabasca Oil. Vermilion Energy also gaining today close to 7%, so a change of 84 cents to $13.05. Teck Resources, a gainer as well, 5.5% up. That's a move of $3.84, taking the share price to $73.31. And then GFL on the news that it's moving its headquarters. It's gaining 4.7% today. It ended the day at 61.37. Energy fuels dropping today, losing $1.36 a share, down 4.2%. And then Wesdome Gold is the other loser on the TSX today. It dropped 6.8%, ending the day at 25.11. Let's go to Bloomberg's equities reporter, Stephanie Hughes. She has more details on the moves today. Stephanie, let's start with Teck Resources. They shared a production update. So what did they say?
Yeah, that's right, Marilla. So Toronto-listed shares of Teck Resources gained by over 7% at their highest point today, which briefly brought the stock price to its highest level ever. It was also one of the top performers on the TSX, as, like you alluded to earlier in your segment there. It was also the biggest intraday gain since September. So pretty big move for the Canadian miner today. And like you said, that's because of its fourth quarter copper production update that came ahead of what analysts were expecting. So it said that copper output of just over 134,000 tons beat expectations of just over 116,000 tons. So that's a pretty wide margin for it to beat at. The company also expects much higher settlement pricing adjustments given the run-up in base metal prices lately. And in fact, Citi analyst Alexander Hacking said that this pricing tailwind of around $295 million is significantly higher than what he and his team calculated for. So thumbs up all around from the share price move, the analyst commentary, and Teck shares have been reversing a lot of their losses over the past month or so. Last time I checked this morning, it was up about 17% on a one-year basis. I'm looking at the chart now. It's about up 15%, but that's making progress since it was in the red for a lot of the past year. And developments like today are helping move forward in that progress, Marella.
Okay, let's get to GFL because they are moving their headquarters. And I thought perhaps the stock would go down. In fact, it went up.
It went up, yeah. GFL, those shares gained by over 6% today because they're moving to a sunnier location. So that was its biggest gain since last July. It also brought the share price to its highest level since mid-December. And GFL Environmental, for those who don't know, is a solid waste management company. You've probably seen their green trucks roam around Toronto or in southern Ontario if you live around the area. But the reason why it's gaining is because the company said it's planning to relocate its executive headquarters to Miami Beach, Florida, away from its current location of Vaughan, Ontario. That said, their incorporation jurisdiction will remain in Ontario. So this is a move that they expect will broaden their eligibility to participate in U.S. equity indices while still being able to trade in Canadian markets. So to be kind of dual listed, so to speak. In fact, CEO Patrick Dovigi said that he expects that this approach will raise their company's profile among shareholders, a wider range of shareholders if we're taking a cross-border approach there. So traders seem to be reacting to that expectation, Marella.
All right. We will leave it there. Stephanie, thanks for the update. Let's get to mover south of the border. Bloomberg senior equities reporter Bailey Lipschultz is there and joins us now. Bailey, I'm sure a lot of whiplash movement this afternoon after that post by Donald Trump. But let's start with Berkshire Hathaway parting ways with Kraft Heinz. How much of a stake does it actually have?
Yeah, according to filings late yesterday evening, Berkshire Hathaway filing to potentially sell its stake, and it is a 28% stake in the company. So the largest shareholder in Kraft Heinz, again, pretty sizable in terms of just sheer monetary value. But this is also a well-known company that has been backed by Warren Buffett. Obviously, Greg Abel now in the seat leading the company. But when you look at the initial share reaction, Kraft Heinz closing at the lowest level since March 2020, this is just the latest step to the downside for shares of the company as it works to split back up. Obviously, this does come after Warren Buffett was very vocal about disappointment around the plans to break up the two companies, a merger that he really helped set up a number of years ago when the two companies formed the current conglomerate that is known as Kraft Heinz. Obviously, the pushback from the analysts, kind of like this was relatively expected at some point, but it does seem like Greg Abel, now that he's in the seat, is going to want to reshape and tighten up the portfolio. So it does seem like kind of the first company to get kicked out of that portfolio is going to be Kraft Heinz. It'll be interesting to see where Berkshire reallocates that capital, we won't know that until 13F season. So it'll be certainly something that's closely watched, but nonetheless, a big move to the downside for Kraft Heinz. Again, closing at the lowest level since March 2020 and really just having a rough go.
Yeah, well, it's interesting, too. We'll see how Berkshire Hathaway responds and what investors think, because they have somebody new in the position. We'll see how much confidence they place in him. Let's get to Apple, which has plans for Siri. What are the plans?
Yeah, those plans are to better compete with Google, better compete with Anthropic, and better to compete with OpenAI. So Bloomberg reporting that they're going to revamp Siri as a built-in chatbot, trying to push away OpenAI and what they've been able to do. Not a big move. We did see an initial kind of pop in the shares, more than 1%, but it did close up modestly higher. The big question obviously is going to be, how is this implemented for those of us who are iPhone users? You can use Siri to answer questions like the weather, but there's not really any engagement. So it does seem like, according to Bloomberg's reporting, that is going to be a better push to try to fend off OpenAI and kind of the fact that we've seen a number of people using the app on their phone, using it in their smart desk, whether it's OpenAI or Microsoft's Gemini, and trying to kind of fend off some of these rivals, just given the uncertainty around what the chatbots can look like. Obviously, if people start shifting away from the iPhone, then that helps or would hurt the company pretty tremendously. So again, a modest move higher today, all things considering, a day that was really relatively risk-on after yesterday's sharp sell-off.
Okay, let's talk a little bit about market reaction in the U.S. to the news this afternoon from Donald Trump that there won't be tariffs on European countries because of Greenland. How did that play out?
Yeah, we saw kind of the taco trade take off. Again, expectations that Trump is going to walk this back, whether or not it's a kind of typical politics, I'll leave that up to the viewer, but we did see this broader market pick up when it became more of a question around positioning in Greenland and what that actually could look like, as opposed to slapping on kind of nonchalantly tariffs on any country that opposes that. We did see a number of sectors outperform. I do want to call out the outperformance that we saw in semiconductors. We saw the Philadelphia SOX index closing at a record high, building on some momentum. We saw outperformance from Intel and SanDisk, among others. SanDisk has basically doubled so far this year, so huge moves for some of these companies. As you can see, AMD up more than 7%, as well as Micron up 6%. So this is partly built on expectations around tariffs, and also just the fact that NVIDIA's Jensen Huang was talking about the need for microchips and kind of storage. So you're dealing with chip stocks rebounding today. We did see a bit of a flight to safety yesterday. We've seen a number of winning streaks for some of these companies. So it does seem like, at least for this moment, investors are breathing a sigh of relief. The question will be what tomorrow brings, and if this week is any kind of signal, it could be volatile again.
Yep, that's for sure. Bailey, thanks for the update. Appreciate that. Up next, we'll get a market reaction to that speech Donald Trump first gave this morning in Davos, and then what came later. We're back in a moment. The U.S. president says there's a deal on Greenland. That sent markets spiking this afternoon. Let's get market reaction from Mark Lucchini. He's president at Janney Capital Management. Thanks for joining us today.
Thank you.
Investors are pretty happy about the turn of events on tariffs for European countries. But the rhetoric changes so quickly with the American president. How long could this last?
Well, as we know, given the fact that he seems to be in perpetual motion, it may not even last 24 hours, or at least it could move to a different narrative that would be equally spooky for the market. So, I mean, obviously, we've learned to deal with the predictability of the president's unpredictability, and markets, for the most part, seem to take it in stride. But I think this one was a little bit different in terms of it was a bit of a cocktail between not only the implications of a potential military adventure into Greenland and how it would invoke our NATO neighbors and allies in terms of a response, but also the fact that it coincided with the fact that you had spiking yields in Japan, as the new Prime Minister Takaichi is calling for a rather robust fiscal response to Japanese somewhat lethargic economic conditions. And as a consequence of that, it roiled bond markets a little bit around the world and unsettled equities along with Greenland overtures collectively.
Okay, let's talk a little bit more about what you call a corrective process carrying on. What would the prompts be for that to continue?
Well, I think we have a couple of things at stake here. We are just embarking on a new earnings season where companies are starting to announce their quarterly results for the fourth quarter that we'll get a slew of over the next week or two. And if they fail to meet elevated expectations at a time when the multiple on the market is 22 times forward estimates, which is not inexpensive, and as well some of the skepticism that's been introduced into the whole AI narrative, that collectively seems to be hitting the tape at a time when there is some uncertainty as to what the Federal Reserve's response is going to be to some of the overtures that we're seeing to politically capture some of the associates that are either being considered or currently reside on the Federal Reserve Board.
Do you remain fully invested at this point? You talked a little bit about dealing with the uncertainty of the American president. Are you keeping cash on hand because there seems to be more volatility?
Well, we're kind of bracing for more volatility. It's actually quite typical in the second year of our presidential term. However, the fundamental underpinnings for the economy keep us pretty fully invested and constructive on equities. Economic activity in the United States remains relatively healthy, in spite of the fact that we've seen a downshift in job growth, which has been a little bit worrisome and certainly something we're keeping an eye on. But at the same time, other aspects of the economy are eliciting green shoots relative to prospects anyway for employment conditions. And so on balance, that seems to be a relatively fertile environment for corporate profits to match even somewhat elevated expectations and therefore deliver on another year of an advance in equity prices, continuing to build on this bull market that we've had now for several years running.
Mark, you like gold, and I'm wondering what weight you've given it in your portfolio and whether or not you've trimmed it given the run it's had.
We haven't trimmed it yet. Currently, we've allowed it to run. It's about 7 or 8% of our portfolio, which is not inconsequential. Typically, we would suggest a kind of a 3 to 5% weighting for most investors. So we continue to think the prospects for gold here are quite bright, given the fact that you have falling real interest rates, which typically act as kryptonite for gold prices if they're elevated. You have foreign central bank buying in copious amounts as a way to diversify away from U.S.-based assets. And of course, last but not least is the fact that we have these geopolitical flares, some of which are known and some of which seem to be introduced on a fairly regular basis. That's enough to keep investors on their heels and look for anti-dollar, anti-risk assets as a hedge in portfolios.
What about other precious metals?
Well, we've been pretty constructive on silver prices, although given the recent run, we think they're primed for a pullback, which could even be quite significant. It seems as that, though, that's become a very much a one-sided trade at this juncture. So we'd still be buyers of silver on a pullback to perhaps in the mid to upper $70 range. But at these levels, we look at it being overly extended by some standard deviations that are exceedingly unusual to see, historically speaking, and typically precede rather significant drawdowns as investors' appetites cool for the industrial metal.
Can I also get your take on the energy sector? There was so much interest last year because of AI data center build out. You're seeing some of the natural gas moderation because of a sort of warmer winter, especially in the U.S. What are you doing with your energy investment at this point?
Yeah, sure. It's kind of counterintuitive because even though there are obvious concerns about the supply-demand imbalance relative to the capacity in the Middle East, as well as obviously the potential production that could be brought online at elevated oil prices here in the United States, oil stocks are actually performing quite well. If you look at the broad industry sector ETF that represents energy stocks XLE, or something even more along the lines of the oil services stocks, such as Halliburton or Schlumberger, they're actually acting quite well on prospects of not only opportunities perhaps that may emerge in Venezuela, but I think also the fact that I think investors have come to understand that these companies have really addressed the fact that they aren't necessarily tied with a one-to-one correlation on the direction of oil prices in order to prosper.
Yeah, I was just looking up XLE, and it did hit record highs yesterday. All right, Mark, I'm going to leave it there with you, sir. Thanks for joining us. Appreciate it.
You're welcome. Anytime. Thank you.
Trump saying today that he and the NATO Secretary General Mark Rutte have established a framework for a possible agreement on Greenland. We'll tell you more in a moment. The U.S. president says he's worked out a deal with NATO Secretary General Mark Rutte and formed the framework of that future deal with respect to Greenland. For more on what it could mean, let's go to Marco Papich. He's chief strategist at BCA Research. Marco, thanks for your time.
It's a pleasure. Thank you.
Why do you think this happened so quickly? We had the U.S. president speak at Davos today saying he has removed the idea of going militarily into Greenland, which investors were relieved about. And only hours later, there is a deal. Why do you think this came about as quickly as it did?
My view is that President Trump should not be analyzed by starting off with his preferences. I think that President Trump, more so than any politician maybe that investors have had to deal with, doesn't really have set preferences. So don't try to figure out what he wants. What's important is to figure out what constrains him. What are the constraints around the president? And it was very clear over the last several weeks, not so much the reaction from the rest of the world, because that's given. It was really the reaction from his own Republican Party. I mean, several Republican senators were very harsh in their assessment of how intelligent this move was. Senator John Kennedy of Louisiana, a conservative Republican, called it weapons-grade stupid. Senator Tom Tillis of North Carolina said, you know what gets me cranky in the morning? Stupid. And so I think it was that reaction from his own party, and not from centrist Republicans. I mean, we're talking some pretty conservative, some strong allies of his, that changed his mind.
Okay, so if you look at the constraints, and you mentioned what some members of his own party had to say, are you also considering constraints beyond that? Constraints, for example, with NATO in play, constraints on European trade. Are you looking at those kinds of constraints as well?
I think we as investors should look at an array of constraints. You're absolutely correct. I just think that it's pretty shocking how fast this episode ended. I mean, let's take, for example, the fact that your team contacted me, I think last week, maybe early this week, and then by the time that we're here on air, the issue is over. So I think we both agree this was a little faster in terms of how quickly the taco trade unraveled. And so I think that the difference this time from, let's say, April 2nd with the tariffs was just his own allies. But I agree with you. There were other things, of course, as well, including market reaction as well.
Is this perhaps a sign of the same cycle that's being repeated now, losing some of the power because people are figuring it out and sort of cutting into it? And perhaps that's why we're seeing things move as quickly as we did this time?
I don't know. That's an interesting question. On one hand, the market reaction on Tuesday, when the U.S. markets were open, was pretty powerful. So I would say, I hesitate to say that sort of the investment community has learned to take a breath and ignore some of the strong words from President Trump, because I think we both agree Tuesday was pretty dramatic. On the other hand, your point is valid that President Trump himself may be learning that there's diminishing returns. In this particular case, everything is fine. We've put Greenland back in the box. We're all good. But the reality is that for whatever reason that he wanted Greenland, President Trump that is, he was, at least for a few weeks or a month, willing to burn the Western alliance for the sake of it. And even though it's not resolved and everyone's friendly and it's the magic of Davos, that solved it all, the problem is that if you're a policymaker running a European country, you now have to start thinking about a future where maybe it doesn't turn around this quickly.
Do you expect Trump to still pursue purchasing Greenland? We don't know the details of this framework agreement. Clearly, it's been okayed in a very initial stage. But do you expect Trump to push for more if he doesn't like the details when they're released?
I do expect President Trump to use Greenland as a potential technical legal reason to impose tariffs on Europe if those tariffs are removed by the Supreme Court. And I think this is something that's where I would try to connect the dots here. President Trump is in a lot of pressure. He's under a lot of pressure. His signature legislation, think Obamacare and Obama, right? Treasury Secretary Scott Bessent has made that connection. This is like Trump's Obamacare. I mean, it's tariffs. If the Supreme Court of the United States rules against them, I mean, that is a big deal. And I think that he may need to resurrect tariff as a national security issue in order to justify future national security tariffs on Europe. So think of it in that way. It's like a legal, arrow in his quiver, if you will. But I would say one more thing. I do think the path forward is simply to allow the people of Greenland to choose. I think that's probably where this is headed over the next 5 years, maybe even shorter. And I think once they choose to, let's say, be independent, I absolutely do not consider a future where 57,000 people choose a geopolitical direction of North Atlantic. Like, that is not a future that exists. At no point over the short term, medium term, long term will 57,000 people who inhabit Greenland have actual sovereignty over their foreign policy and defense. And so the solution is just to give them independence, a vote at the UN. They can run domestic policy, but obviously they will have to sign a treaty with either the US or Denmark that, gives those NATO member states complete control over their defense and foreign policy.
What do you think the announcement today, this afternoon, that there is some sort of deal does to the Sell America theme that keeps popping up?
I think it's tough to connect the deal with the Sell America trade. I think that Sell America trade focuses on the wrong part of the trade. There isn't a Sell America trade, in my view, and this has been my strong view for over 18 months. So I've been telling my clients that non-US equity markets would outperform, and they did in a big way last year, and I think that will continue. But that's not a Sell America trade, that's buy rest of the world trade. Now, of course, the fact is most of my clients are 60 to 80% overweight US. And so naturally, they will have to sell America to buy at least some of those assets outside of the US dollar zone. But it's not necessarily because America is collapsing. It's more that the rest of the world is reacting to aggressive, but quite frankly, sometimes honest Trump statements. They're reacting to it by saying, like, yeah, I mean, he is right. 80% of our trade does go to the US. So maybe we should do something about that. And that was what Prime Minister Carney said in Davos. The reason it was a profound statement was that he told the Davos elite, stop pearl clutching. The world you're talking about is over. Americans are not going to be nice to us. Let's instead take their honest but aggressive assessment of where we are and try to do something about it. And in the process of doing something about it, say a country like Canada, breaking down provincial trade barriers, making new trade connections with the rest of the world, becoming a bridge between Europe and Asia. Hey, that sounds to me as an investor like a pretty good reason to load up on Canadian assets. So the process of divesting and becoming more sovereign, whether you're Europe, South Korea, Japan, whether it's Canada, that process in of itself is market positive. And that's why it's not Sell America trade. It's buy rest of the world trade.
Marco, got to leave it there, sir. Appreciate your time with this. Thank you.
Absolutely. Thank you.
Coming up, we'll zero in on trends in agricultural ETFs. Back a moment. Here are the stories making news right now. The U.S. President Donald Trump says Canada lives because of the U.S. During a speech at the World Economic Forum in Davos, Trump said the U.S. is building a golden dome that will defend Canada. Trump also gets Canada a lot of freebies, he says, for which they should be grateful but are not. On trade, Trump says tariffs have radically reduced America's ballooning deficit. At the same forum, Canada's International Trade Minister Moninder Sidhu says Canada must expand trade with India, especially in agriculture and energy. He says formal talks on a new economic agreement could begin in February. India is the next target for Mark Carney's push to diversify trade as Ottawa takes a more pragmatic approach to repairing ties. Royal Bank of Canada CEO Dave McKay says fluid trade with Canada is good for the U.S., adding America risks a surge in inflation if flows between both countries are cut off. He was speaking to Bloomberg on the sidelines of Davos, and he said Canada helps the U.S. with affordability. He also said Canada CUSMA is key for the economies of both the U.S. and Canada. On our ETF report, we focused on investing in ETFs in agriculture. We were joined by Sal Gilberti, CEO of Tecreum Trading, to discuss the basic mechanisms of some of the ETFs.
As a sponsor of the ETFs, we're not allowed to give buy or sell recommendations, but we can talk about the fundamentals of the commodities, which is what we're here to do.
Right. Start off with the soybean fund, SOYB. So what are you tracking here? U.S. soybean futures, essentially?
That's correct. It has a combination of U.S. soybean futures in it to minimize the effects of what they call contango and backwardation, complicated things in rolling of the futures positions. Bottom line is it's meant to provide investors exposure to soybeans. So if they believe soybeans would help their portfolio, and they certainly have proven that they can do so statistically, this is an easy way, as you said exactly, to get soybeans in your portfolio using a stock account. It's very simple. You don't have to worry about margin. You don't have to worry about futures trade, the complexities of futures trading. It's all taken care of inside of the ETF, and the ETF is purchased just like a stock. And again, it's designed so that if soybeans go up, the soybean ETF goes up, and if soybeans go down, the soybean ETF goes down.
I know this, I risk getting technical here, and you have deep knowledge of this, but is there ever a problem with these funds of rolling over futures contracts and seeing the net asset value erode?
There is sometimes when the market is in a normal carry state, they call it, when soybeans are worth, well, it happens in any commodity. If you're selling a bushel of something for $10 and you have to rebuy it for, say, $10.10, you obviously buy less of that. So in a normal carry market, that is a bit of erosion, but it's built into the pricing, and investors, it's whether you trade futures, it's whether you trade the ETF, it doesn't matter. It's just fundamental part of the market. So what we've done is simplify all that. Investors, have to face the consequences of it. But if you want to be long soybeans, you either have to buy a bushel of soybeans, you have to buy soybean futures, or you can buy a soybean ETF. And that's the tool that we provide.
And it looks to me like it's tracked soybean, the return on soybeans fairly well over the past year. I'm showing a price change down about 1%. And soybean prices themselves have declined about 1/3 of 1%. So pretty close return to the futures over the past year.
That's right. It should be, because it holds futures. So what the futures do, what the futures that it holds do, then that's what the fund itself will do. And so it's a convenient way for investors to get exposure to soybeans, which, many people will want to do. Grains don't correlate very well with stocks. And so they are a proven diversifier in a portfolio. I think 7 of the last 7 times that the S&P 500 has declined 10% or more, the soybeans have outperformed. So that particular, the index that soybean fund follows has outperformed the S&P 500 all 7 of the last 7 times that the S&P was down 10% or more. And so that is a diversifier for portfolios. Now, sometimes the S&P is down and soybeans are down. They're just down less than the S&P. It does diversify a portfolio, gives more stability.
Let's move on to another one. This is the Tecreum Corn Fund, CORN. And it looks as though this one has also done a pretty good job of matching the return from corn. It's down about 13% in the past year. And my numbers are showing that corn futures are down roughly 13%. So again, reflecting the move in the futures.
Right. Again, it holds futures, so it will do what the futures do. And corn is very unique in that since the Renewable Fuels Act in the United States was passed in 2006, 2007, it reset the price of grains globally. And corn prices, whenever they get to about $3.50 to $4 a bushel, in that range, they kind of stop moving lower. They kind of, they'll go lower for very brief periods of time. But that seems to be the futures equivalent break-even price of corn in the U.S. And of course, that's what the corn ETF holds, is corn futures in the U.S. And so it's interesting to note that corn prices have doubled 3 times in the last 17 years from that $3.50 to $4 a bushel area. And corn prices right now are about $4.10, $4.20 a bushel. So we're within 5% or less of that area where people generally begin to accumulate corn in their portfolio. And, in that 17-year time period, people who bought corn when corn was between $3.50 and $4, they had to hold it in one instance about a year and a half before prices went up to $7.50. In another instance, they had to hold it about 2.5 years before that happened. Another instance, they had to hold it 6.5 years. So you don't know when it will happen. But what happens is corn prices will hit a break-even price where farmers will just plant something else. And so historically, the price very rarely goes below that $3.50 to $4 range in corn. And when it stops raining, or you don't get enough rain one summer, prices go up very, very quickly. And again, 3 times in the last 17 years, corn prices have doubled from the $3.50 to $4 area. And they're approaching that area right now. So it's something for investors to keep an eye on.
Just finally, very quickly, if we could, wheat, SRW wheat, is down about 9% in the past year. And you offer a wheat ETF, WEAT, and we're looking at the chart for it. And I am showing that one down about 18%. So it looks, I guess there's different grades of wheat. On the surface, it looks like that might have underperformed the actual wheat contract over the past year. But maybe, is it a different type of wheat or something like that?
Well, it could be, and some of the nuances are in the wheat rolls. Wheat markets have been very active globally, and that's caused some pricing dislocations. And again, the ETF itself holds futures, and it will do exactly what those futures do in terms of price movement. If the futures go up, the ETF will go up. If the futures go down, the ETF will go down. There are fees, there are expenses. There's a little bit of slippage when you do, as we talked about earlier in the show, buy and sell those futures. And so those things do affect it. You're not going to get a perfect correlation. No. And they're not meant to track spot. They're meant to do what the futures they hold to.
Straight ahead, the U.S. president says he won't use force to take Greenland. And in fact, there's a deal for the Arctic region. We're back in a moment. During his speech at the World Economic Forum, the American president said he won't use force to take Greenland. However, he also said only the U.S. can secure Greenland. To talk some more about what it means for security in the Arctic and Canada's role in that, we were joined by Ken Coates. He's a distinguished fellow at the Macdonald-Laurier Institute.
The United States basically had all the opportunities to do whatever it wanted in Greenland for decades, really going back to World War II. And they actually had many more armed forces bases there 25 years ago, and they closed a whole bunch of them down. So there's lots of different ways in which Greenland could be protected, and which the NATO alliance could be supported. Trying to figure out what Donald Trump's end game is very, very difficult. All we know is that there's considerable sort of uncertainty. You could call it chaos if you wanted, but certain political uncertainty. And people are really struggling to make hide their head or tails out of sort of what he actually has in mind.
Now, is Greenland that vital? And is our North then? I mean, it's essentially almost one and the same. Or is this all about minerals and other things like that?
I think it's primarily about sort of minerals, but it's also about sort of big marks on the map. It's going back to almost the 19th century, a time when European countries were sort of carving up the world and carving up Africa and Asia and places like that and creating whole new countries and big colonies. You have a sense that there's some sort of territorial aspirations here that are really hard to figure out, to be honest. But I think the mineral parts are really important. But I think this is where the stuff with Canada sort of comes in. Now, the Canadian Arctic is not Canada's hotspot. Canada's hotspot is actually the subarctic. There's good resources in the Arctic. Not what we thought there would be. We thought one time there'd be lots of oil and natural gas up there, and turned out to be much smaller. There are some mineral deposits that are very expensive to get out of the ground, so you have to have really super high quality products like they have at Baffin Land and Edgeco Eagle and places like that. So it isn't so much the Arctic we should be talking about. We should be looking about the provincial north, the northern Manitoba, northern Ontario, northern Quebec, British Columbia, Alberta. The northern Saskatchewan has some of the largest uranium deposits in the world. So it's actually the subarctic that's actually should be our focus. And I think I always find the Arctic stuff to be a little bit of a distraction. It's sort of, pointing our directions way up north because we're kind of nostalgic about it. And we have very romantic notions about the Inuit and about the far north. We can do better in the Arctic for sure. But I think we have to really make some good sense out of what our defensive strategy is for all of Canada, including the 50% of the country that's in the subarctic. That's where our resource future actually rests.
Now, is there a realistic expectation we could actually defend our country against if the Americans chose to invade?
No. If they decided to invade, we would be very, very weak very quickly. We sort of have to admire what the Ukraine has done against Russia, but I'm not so sure we'd last a couple of weeks. And even the Prime Minister has indicated that he's concerned about that. But the question is, who are you defending against? If you're defending against the United States, we'd have to spend our entire GDP on defense and have half of our young people serving in the armed forces. That's not going to be likely and not going to happen at all. But can we protect it better? The answer is absolutely yes. We could have more Arctic submarines. We could have better sensor systems in the far north. We can not let the debate about airplanes and fighter jets be transformed almost overnight from a conversation about what would we need militarily, we've known for 20 years, into a conversation about Canadian industrial policy. Now let's bring in a different fighter, and maybe we'll get Saab to come over, and we'll get more industrial plants and get some more economic benefits out of it. That's a terrible thing to do. You have to defend the North with the best equipment you possibly can, to provide the right surveillance against any enemies. And I think over time the Americans will be less of a threat. We're never going to go back to sort of thinking of them as our best friends forever. But we also have to have much more control over what the Russians are doing in the far north, what the Chinese might be interested in doing, and protecting NATO interests. We should be looking at how we can defend Greenland should anything happen to Greenland. And I think there are more technological solutions than there are, sort of old style military boots on the ground kind of an approach. But in Canada so far, we haven't moved along that line very quickly. We've actually been talking about it for years, and we haven't done very much. So I'm still looking for a sign that we're actually going to do something different.
Ken Coates is a distinguished fellow at the Macdonald Laurier Institute. Coming up, Bell, Let's Talk Day to Day. We got more from Caitlin Morrison of Perry House about their $49 billion impact in Canada. Matthew Perry House is a Canadian nonprofit dedicated to supporting individuals as they rebuild their lives after addiction treatment. Created to honor, of course, the legacy of the late Canadian actor. Now, the mission is to mitigate the social and economic impacts of addiction in Canada. For more, Caitlin Morrison joined us. She's Perry's younger sister and executive director of Matthew Perry House.
When we're talking about, the house itself, the sort of physical space, we're looking at people who are coming into in crisis. They would typically be seeking treatment. Typically, they have lives that have been really impacted financially and socially by substance use, and they really need a tremendous amount of support, not just to to get to the other side of the physical aspects of substance addiction, but also to figure out a way to get back to living in a world that is productive and prosperous. But we also do work outside of that physical house structure. And what we attempt to do there is to encourage people to assess their own substance use health, assess their relationship with substances, and see if it's something that is beginning to impede their lives, impede their productivity, prevent them from attaining the kind of success, both in life and professionally, that they're trying to achieve. And we're hoping that overall, from a human perspective, this kind of thing will save a lot of lives. And from a financial perspective, you mentioned before the break, $49 billion a year in cost is extraordinary, and it would be much better to invest in making sure that Canadians are prosperous and healthy, I think, than to lose money to the opposite.
Well, and that's what I think is part of the. We don't talk, I think, as much about the financial impact, but people lose everything, and you can help them get rid of the habit, but you still have to help them get going again, because a lot of them have lost everything, and from all economic strata.
That's absolutely right. So it is about helping to facilitate getting back into putting all the pieces back together, and also avoiding something that happens to far too many Canadian families, which is a cycle of treatment and return to crisis and treatment again. I have talked to far too many parents, loved ones, spouses who are on their third mortgage, and they want to try to get a fourth one to send somebody for support again, but they're also not really sure if it's going to do anything this time. And that's another thing that is impacting families across the country, and we hope can be solved by a more all-inclusive, longer-term support system.
You mentioned about talking to people, trying to catch them earlier, essentially, I mean, is what that boils down to, before the problem becomes the problem, because a lot of people can say, well, I'm fine, I just go out and have a good time or whatever, and that's it, and I'm with it. But how can coworkers approach that, or companies, how do they deal with something like that? It has to be a difficult situation and delicate.
Yeah, it's a delicate situation, and I mean, substance use is very much embedded into our culture and corporate culture. I mean, you go to events, conferences, corporate evening things, and typically alcohol is a big part of that. There are substances everywhere, and people tend to think of substances as celebratory, and it often is when the relationship with them is healthy. But for those for whom it isn't healthy, I was talking to somebody the other day, and I won't give too many details about them because I don't want anyone to know who they are, but they were talking about the fact that they've been thinking about pursuing, sobriety, pursuing getting rid of alcohol specifically in their lives, but it's very difficult because every time they go to an event, they're expected to have a drink in their hand. And so figuring out a way to include those who choose to not drink in that same celebratory culture, I think would be a great move for businesses to make. And being open to people asking for help before, maybe their job isn't being impacted yet, but saying, look, as an employee, if you think that there's something in your life that is impacting your ability to be the best possible employee that you can be, we want to help you get support. Well, that support is still maybe it's a therapy session once a week before it's something that's more costly and more long-term and more of a crisis.
Caitlin Morrison is Executive Director of Matthew Perry House. Here's how we ended the day today on Bay Street and Wall Street. The TSX Composite, a gain of 101.3 of 1%. The S&P 500 scraped out a gain of 78 points today, over 1%, and the Nasdaq moved up 270 points, 1.2% today. Much of the movement late in the day having to do with Donald Trump posting that there was some sort of framework agreement on Greenland. That means he won't impose tariffs on European countries. That does it for The Close today. Thanks for joining us. We'll see you tomorrow.